Do you need to enter an episodic pivot on the day of the entry? And the answer is no, not necessarily, especially on the short side. On the short side, if you are trading episodic pivot where a stock had a very negative news or missed earnings, then actually entering on the day of earnings itself, it can be a very high risk trade, because what happens is the stock might gap down and it recovers and it rallies for a couple of days, and then the real breakdown starts after some day. So delayed reaction to earnings or delayed reaction to an episodic pivot is a very good setup. In this kind of a thing, what you do is you don't short it or you don't go long on the day the episodic pivot is. And especially in this video, I'm going to focus on short side. And on the short side, this is a very good setup where you can find stocks which had negative earnings or they missed earnings, and then they gap down or they went down, and then they bounce back for a couple of days, and they have sometimes it is just a 2 or 3 days bounce, and when they start breaking down, and if you enter on that particular day, it gives you a lower risk trade. So here are a couple of examples of this kind of a trades which I'm going to show you on TC2000. So let's look at some of these examples. So let's look at like SMTC as an example of this, where there was an earnings news, and after that news the stock gapped down. Now if you tried to short it on the gap down day, it recovered for rest of the day, but second day entry was very good because it gives you a very low risk kind of an entry, and subsequently if you didn't manage to do the second day entry, subsequently the other entry, and after that the stock has gone down 18 to 15%. Similarly, couple of days ago, Net had earnings. The earnings miss was a big on Net. But in this case, what happened with that miss in earnings is that this particular stock actually recovered. And this happens because there is a tendency of those who are shorted in anticipation of a negative earnings to cover their trade. And then uh, basically the rest of the day traders pile on and the stock rebounds. But after that, next day, shorting it was a very low risk kind of an entry for a possible trade where the stock can continue to go down because there is a catalyst for this particular trade. Similarly, if you look at CRDO, CRDO had a news which was a very negative news. It gapped down, but nothing really happened on that particular day, and then it goes sideways and then it breaks down, and from the breakdown the stock went down 20%. Similarly, W is an example of this, where the stock had this big news catalyst, and then after that it recovered for 3 to 4 days, and then on this particular day there was an opportunity to short it. So delayed reaction to earnings is a very good strategy, because if you try to short on the day of the earnings, unless you are early, you might not get the best risk reward. But after a weak rally of 3 to 4 days, or sometimes the best entry is on the next day, is very good entry. So this is another example of a trade like this. Now obviously when you are trading the episodic pivot on the short side, you're not going to get the same kind of a profit as what you get on a long side, because long side the profit potential is unlimited. On the short side you'll have to be happy with the smaller profit. So this delayed reaction to earnings is a very good setup, and for those of you who cannot enter an episodic pivot on the day of the entry, or the risk might be too high because of the stops involved in that, delayed reaction to earnings or delayed reaction to an episodic pivot is an entry strategy which can work very well, and this can work even on the long side.